This is not financial nor professional advice. This video is for entertainment only. Hey everyone, the stock market is trying to decide how deep of a hole it wants to dig in our financial futures and present. And I think the market probably has a ways to go. I think it's trying to form a bottom. We see signs of that. It's possible that this might be the bottom, actually. But we want to see it start to turn up definitively before we decide that that's the case. I never try to catch the exact bottom. I try to be towards the bottom. The stock market right now, if you go by the S&P 500, its support level is probably about 3,800. That's based on Fibonacci. What is Fibonacci? Fibonacci is based on a sequence that occurs over and over in nature and in anything made or created by humans. And we see this numbers show up over and over. In fact, it's referred to as the golden ratio. You know, it's such a part of nature and anything created by man. And if we look at the Fibonacci support level on the S&P 500, it's at around 3,800. Right now, the S&P 500 is a little less than 4,200. So we got probably about 10% to go. It's possible that it might stop at about 5%, which would be around 4,000. So I think I will start to buy the S&P 500 generally, or buy Berkshire Hathaway, which is kind of a conservative S&P 500 in my mind. Okay, if it gets below 4,000, I'll think about buying Berkshire Hathaway, Warren Buffett's fund, but I would feel more confident if it goes below or around 3,800, because I'm loading the boat in that case. It might not be the exact bottom. I mean, that would be the S&P 500 at below bear market status, which is really bad. It'd be a loss of 20%. But I think we could go 30 or maybe even 40% if things get horrible, or we have a black swan world event, and those can always occur, and especially with the war in Ukraine, this could occur quickly. I tend to think right now the likelihood is that we will start to hear good news from Ukraine. But that could go either way, and it could vary by the week and the time of day. Yeah, okay. The reason I think we could get good news is because it's said that Poland's going to give Ukraine jets. And Ukraine has pilots, but they need to have Soviet-made jets, which Poland has. So Poland's going to give their jets to Ukraine, which they're then going to use to fight the Russians, and the United States is going to replace the jets they give to Ukraine with United States jets. So this is a way of the United States giving jets without having to do it themselves, or ourselves, I should say. So something like that would be extremely bullish and could turn the tide of the war significantly. And Ukraine, you know, they're putting up such a fight. The CPI will affect how much interest rates are raised. The CPI comes out on March 10th. And on March 16th, we have the decision by the Fed. It's expected that they're going to raise it 0.25%, a quarter of a point, we think they're going to do this as sort of the middle course. They're not going to do zero point 0.5 because of the Russia-Ukraine war, and they're probably not going to not increase the rates because inflation is getting so bad. But they're going to be watching the inflation number, the CPI, that comes out on March 10th, and that will influence their decision. But if they come out and say, oh, we've decided, we're just kidding, we're not going to raise it at all, that would raise stock prices. I'm buying metals because in my mind, metals are like cash. Okay, only they're better than cash. During inflationary times, your cash loses money. If inflation goes up 7%, your dollar buys 7% less than it did a year ago. Okay, that's how dramatic the effect is. Metals, on the other hand, are likely to stay the same or generally go up. They can go down too, but the likelihood in this present environment is that they stay the same or go up. And so I've been buying a lot of mining and metals ETFs. But the thing I did that's kind of a wild thing is I bought a gold ETF that's based on the price of gold bullion. So it's pretty directly related to the price of gold. And the symbol for this ETF is GLD. So it's gold without the O. They call gold the old man of the metals, okay, just because it's been around so long, and civilizations have been basing their currency on gold a lot until recently when the United States decided to go off the gold standard. And I bought gold about 2 or 3 trading days prior to this, and this was before Biden announced that we're not going to buy oil from Russia. And so I think that had the effect of making oil shoot up in price, which made gold also go up because people are looking for a store of value during Russia's invasion of Ukraine. But of course, it more directly affected the price of oil. And Gush is based on different aspects, different companies mainly that invest in oil. So it's a very profitable investment for me. It's double leveraged. For every dollar that these oil companies go up in value, Gush, G-U-S-H, goes up $2. So it's double leveraged, as we say. And this is much more fun than doing inverse funds or shorting the market, which I've decided this market is too weird and crazy to even think of doing that. This is kind of a horror show for anyone wanting to do shorting, because even if the market generally goes down during the day, you only want to short the market on a short-term basis because it generally goes up. And this market is so volatile that it can whip around and slap you in the face. And you think you're doing the right thing, and maybe you are in a longer basis, but on a daily basis, you can get whipped around 5-10% like that. So I think it's best to find stocks that'll either remain the same or have a good chance of going up, like the metal stocks, and especially gold. But Gush is an oil gusher, and it's been a good investment. I don't recommend this to anybody unless you're deranged like me and are somewhat used to doing this, because it is risky and it is dangerous, and because it can whip around on you pretty quickly too. And you don't want to be caught getting whipsawed in this market. You want to avoid that. But I never learned my lesson, so I keep going back. So I'm going to join Gamblers Anonymous anytime now. No, it's actually, this market's been good to me. It just hasn't been fun to do. I'm actually more of a longer term bull, but this market has turned me into a short term trader simply because that's the only way you can make money, in my mind, in this market. I keep seeing people that recommend holding on and into your longer term trades. And maybe that's good sound advice if you want to wait a year or two or three. But I'm not that patient, and I've been burnt in the past by following that approach, and I simply don't believe it anymore. Sitting there on a long term basis and taking one kick to the groin after another repeatedly, that just doesn't make sense to me anymore. And I used to do that, and you'll live through it, and it can work out on a long term basis. But I've found this to be way more profitable. And so that's my story, and I'm sticking with it. And be sure to like and subscribe if you've found any of this information helpful, and hit the notification bell so you receive future notice of future videos. And I will see you in the future.